Talk about markets in the agenda. Treasury Secretary Steve Mnuchin is set to testify before the Senate Banking Committee this morning. He's expected to give updates about domestic and international policy. And here to weigh in on that, Bove, equity research analyst at Rafferty Capital Markets. What are you expecting to hear, Dick, today from Mnuchin?
Well, I think there are a lot of issues that he's going to have to deal with. One is the elimination of Dodd-Frank. I don't think that either the Republicans or the Democrats want to get rid of Dodd-Frank. What they want to do, at least the Republicans want to do, is change the structure of how Dodd-Frank is administered. And therefore, there's going to be a lot of conversation and actually conflict over the next few months concerning who's going to be put on the Federal Reserve, who's going to run the SEC, who's going to be on the CFTC, and who's going to be in something called the FSOC. The second thing that's going to happen is there's going to be a desire to change the structure by changing the regulatory powers of the Federal Reserve over the banking industry, getting the Consumer Financial Protection Bureau out of the Federal Reserve, changing the structure of, again, this Financial Stability Oversight Council. Then there's going to be conversation about what should happen with Fannie Mae and Freddie Mac, because that's, particularly unknown at the present time, and yet these companies are likely to be in deficit if we have a tax cut, by the end of this year, which would result in the Treasury having to give them more money. And then there'll be argumentation over the Volcker Rule, the Durbin Amendment, and all sorts of other stuff. So there's quite a bit that needs to be discussed this morning.
Dick, it's Mitch Rochelle. One of the things you mentioned, alphabet soup of all of those agencies and putting new people in charge of them. We're really changing the referees and not the rules. Do you think that's going to be able to happen, or is all of the noise on Capitol Hill going to just slow down the confirmation process, so we're not going to be able to deregulate by changing the referees?
Well, I mean, that's a superb point, because basically that's where the whole battle is going to be. The battle is not going to be in Congress over Dodd-Frank. The battle is going to be over the appointees which are put on these various different committees, because the way Dodd-Frank was written, the power was really given to these various regulatory bodies to implement, the theory in practice. And therefore, it was implemented under the Democrats in a very, if you will, rigorous fashion. And the Republicans are more likely to ease off on a whole bunch of, even the stress tests given to the banks. The Republicans are going to ease off on all of these issues, and I think everybody understands that. So there's going to be a major battleground over every appointee put on one of the bank regulatory agencies.
Speaking of the banking stocks and the financial stocks yesterday, you saw the broad sell-off in the markets, and it was obviously, I don't think it's a stretch to say that, obviously concerns about the agenda not moving forward down in Washington, D.C. in terms of tax reform, the regulatory rollback, and even a rollback of Obamacare. But Goldman Sachs was the biggest contributor, contributed over 1/5 of the Dow's decline yesterday. It was down more than 5%. JP Morgan Chase down almost 4% yesterday. Dick, your thoughts on the performance of those stocks yesterday, and it could be rougher days ahead?
Well, I think what we've been saying for some time is that investing in bank stocks is a treacherous, event, because basically nobody really seems to understand what makes a bank stock tick, or what makes a banking company tick. And I'll give you a simple example. The decline in the 10-year Treasury, I think, also had a big impact on bank stock prices yesterday, because there's this belief that if the yields come down on the 10-year Treasury, banks can't make money, and therefore you ought to sell the stocks. The reality is that banks have $3.6 trillion in securities. They just went up in value significantly yesterday and this morning, and therefore the capital of the banking industry went up, and therefore the banks are likely to produce higher profits in the quarter because of profits taken on the sale of securities. So the stocks are going down because the banks are likely to make more money. That doesn't make any sense, and that's the problem with investing in bank stocks. No one seems to understand that it's all about loans. That's what drives the profits of a bank, and it's not about interest rates. So everybody's focusing on the wrong issue. That creates a lot of problem. That makes these stocks extremely dangerous to deal with.
Dick, great analysis. Thank you so much. It was great to see you this morning.
Thank you.